So next up, we've got Jay Hender. He's the Climate Friendly Executive Manager for Business Development, and his background in government policy and private environmental consultancy services are a great combination to help climate friendly in their drive to affect change and deliver benefits for the landholders, and the community. So Jay's going to be talking to us about supply chain incentives, generating nature positive products in existing markets. So thanks so much for joining us, Jay.
Thanks. I just
Thanks,
wanted
Jay.
to first, Andrew, say that's a really great introduction and um, getting that context on what's driving this change, I think is really important to understand. I am going to go back to a little bit of theory at the start. So apologies, you might have to think a little bit to get your head around some of the concepts. And then I'm going to articulate why I actually think Australia is further ahead in this space than most people realise. And the NRMs are going to start seeing things at the ground level quicker than most people realise. And this is based on discussions with many of the corporates. And I want to reinforce Andrew's point that in Australia, when we talk about nature and nature impacts, yes, mining is an issue, so is development. But most of the negative impacts on nature occur on Australian agriculture. So when we're talking about nature repair, we're actually talking about repairing agricultural landscapes in many instances. And most of what I'm talking about today is in relation to the agricultural sector and what I'm seeing coming down the turnpike. Just for background, I do work in climate friendly. We are a carbon and nature services provider, but I'm not going to talk too much about carbon today. I'll be talking nature. And I have some experience in this space. I worked in the Samuels review of the EPBC Act, particularly on some of these elements, and I have regulated the renewable energy and carbon markets for a number of years within government. So I know a little bit about environmental markets and biodiversity more broadly. Next slide. Okay, ignore the text on this slide. I'm going to explain this slide because it is critical as to how these markets I see forming. So on the left-hand side, you have farm profitability, i.e. making money, and down the bottom, you have nature. And what I'm suggesting is if you have zero nature, you have zero profitability on a farm. You can't generate agricultural production without nature. As you move towards the right, as you gradually increase nature, you have a double dividend where you're getting both high profitability and improvements to nature. However, if you keep moving further and further to the right, you end up in a situation where your nature improvement is coming at a cost to the land manager. So think of having to significantly destock a property to get restoration or converting a crop paddock to native vegetation. As you move further and further to the right, you have less and less traditional profitability on that property. Again, this is theoretical, but hopefully the logic makes sense. On the left-hand side, because the land manager is getting increased profitability through improving nature, that's what I call a double dividend. So information and some incentives is probably going to drive people to improve nature to a certain extent. If I jump all the way to the right-hand side of that, think of a perfectly intact piece of remnant vegetation with no agricultural production. That's not going to make a landholder a huge amount of money. It's coming at a cost to preserve that and maintain it. And certainly restoring nature heavily is going to come at a cost. So that's where a transfer payment is likely to be needed. Think of a carbon project or a nature repair market project. So on that right-hand side, you've got markets where a transfer payment is needed to get land managers to make change. Left-hand side, you have information driving it, and you have this bit in the middle. And it's what I'm calling the blended market zone. And that's actually where I think most of TNFD will be met in Australia. And I'll explain what that might look like. But a key driver in there, I think, will be supply chain incentives. Um, and at the moment, I don't think there's a huge focus in that middle area within government, but I can see it happening in the corporate space. Next slide. This is my rough estimate of the scale of current environmental markets. There are some other ones, but broadly, carbon is the main nature repair market at the moment. And in terms of nature, it's a co-benefit. You have philanthropy still operating with some government money going to nature, not much more last night, unfortunately. So that's relatively modest. It's difficult to estimate philanthropy's investment in nature. There's no simple statistics I could find. You have groups like Accounting for Nature, developing private sector nature repair projects, and the Nature Repair Act will expand into that space. On the left-hand side, you have all of the parts of the agricultural supply chain. You have banks and financiers, property purchasers. You have land valuers, you have insurers, you have abattoirs and key beef processors, you have grain handlers. So there's all of these quite large existing markets that are looking to, first of all, consider can they provide an incentive in their supply chain that both meets TNFD um, commitments, so improves nature, and makes them more profitable. So that left-hand side, I actually think will be the quickest one to grow in the corporate space because it can come with increased profitability for companies and it can be done quickly as it's embedding within current supply chains and existing markets rather than creating whole new environmental markets. Next slide. Here's my guess on what the world might look like in 2030 to 2035. On the right-hand side, you do have a growing Nature Repair Act project market, and philanthropy and government will hopefully grow. I think a lot of those nature repair projects will exist through partly government investment, but also in situations where a company doesn't have a supply chain they can easily influence. The left-hand side is the one that I think will grow most quickly. And I've noted a box saying a natural capital standard. And that's something that I'll explain that we've been working on for a few years now. Next slide. Keep clicking. So we've partnered with a number of an NGO, some people in our eminent scientific institution, and also Farming for the Future to try and deliver a clear standard for the supply chain so that we have accurate metrics that align with all of these international frameworks, but also work for the supply chain to develop these kind of nature positive or carbon positive products that we see forming. We're piloting this standard with a key financier and likely others this year. So we're actually applying it on the ground so that these products can be delivered within the not too distant future within the supply chain. Keep clicking. The goal is for this to be a publicly available free standard from 2025. It'll be piloted under embargo for a year whilst we test it and make sure all of the fine detail works, and whilst we work with a range of key academics to build the science space. Next slide. The standard uses natural capital accounting, so think of Farming for the Future and TNFD as its formal base, and it does measure, report, and evaluate using that framework with much more detail on how that can be integrated into the supply chain. Next slide. So the standard does draw together TNFD, EUDR, science-based targets, and as well as a range of international banking standards, then considers them within the Australian agricultural context as to how do you actually apply those high-level frameworks in a way that's cost-effective and works on Australian farms with sound scientific backing. So that's the key aim. It's meant to work for land managers and it's meant to work for the supply chain. Next slide. Just click through till all the boxes are up. So the standard's got a range of modules in it. It's all up between the standard and supporting documents. It's more than a couple of hundred pages with a supporting Excel. So it's not a small undertaking to prepare this. So Andrew's comment that it's going to be quite a bit of time to develop these standards. He's right. There's a lot of work involved. But it delivers hopefully clarity on how to issue green loans at scale, how to issue sustainability linked loans and nature positive products at scale in the supply chain. It also outlines some assessments on things like land clearing and land use change, as well as drought resilience, which we think will be key for the Australian context. And then it outlines a range of indexes and a natural capital report template. And a key thing it has is it has a requirement for a land management strategy, and that's to avoid perverse outcomes as you repair nature. We don't want corporates incentivizing nature repair that results in a whole lot of fire risk or perverse outcomes for land managers and the NRM regions more broadly. So we do think there is a requirement for that. Next slide. Who will it help? Hopefully land managers, and this is important. If there's not a single standard that everyone's applying in the supply chain, the poor farmers are going to have to comply with 4, 5, 6 different structures. They might have to comply with one for their bank, one for their beef process, one for the grain supply chain, one for their insurer, and who knows what else. So getting a central standard that's aligned will mean that land managers do one lot of data collection and then they can access all of these hopeful supply chain incentives that I can see evolving. So I think we're at a sliding door moment. We can either um, come together and work on one document to solve problems for farmers and help the supply chain, or we can let it keep going where everything's running in parallel and things aren't necessarily in alignment. And I think the land managers will be the ones that lose out if we don't bring this together. Next slide. So thanks. I'll end it there, but I look forward to the panel discussion and hope that that's a slightly different slant than what you may have heard on nature repair markets and how I see them evolving in a TNFD world. Thank you.
Great. Thanks so much, Jay. That was really great, and I'll be very interested to see how Andrew responds to your natural capital standard and how that might feed into what he was saying about the need for the data to underpin more investment.